I can tell you one thing. I think India is becoming a nation of investor from being a nation of saver. What SEBI noticed and which was very important, that 90% plus investors or traders were losing in F&O. I always say that don't follow frenzy, follow fundamentals. I can also correlate one phrase in the cricketing world that form is temporary, class is permanent.
Right.
You have 5 stocks, in 2 stocks you are making money, you book profit. 3 stocks you are having losses, you are saying no, someday it will come. Now somewhere you have to recognize that you might be wrong. 25% year on year return is not sustainable. You might get lucky sometime, but it can't be achieved over a period of time on the large amount of portfolio.
78% of our viewers aren't subscribed. Help us out, folks, and hit that subscribe button and help us bring you more incredible guests. Folks, welcome to Paisa Vaisa. I'm your host, Anupam Gupta, and on this episode, I am thrilled to feature for the very first time Kotak Securities, my guest, Shripal Shah, MD and CEO of Kotak Securities. Shripal, welcome to Paisa Vaisa. Thank you so much for doing this for our audience.
My pleasure, Anupam. Thank you so much. I've been following your podcast, and I really can tell that some of the podcasts really decode the kind of financial concept and simplify. It's great, and looking forward for an interesting conversation here.
Very kind of you. Thank you so much, Shripal. Kotak Securities, a background. All of us, I'm sure that our audience also knows the brand. It has been around for quite some time. Tell us more about it. When did it start? I believe it's more than 30 years old now.
Yes. We are one of the oldest and largest stockbroking firm in India. And in fact, one interesting thing I can mention about is that Kotak Securities became the broking arm first. And then as a group, we got the banking license later on. So we were broker first and then banker. In 2002 or 3 is when Kotak Bank would have got the banking license. So yes, it dates back to 3 decades long journey, and fortunately I am part of this journey, most part of this journey.
So you've seen ups, downs, you've seen how retail investors have come in, what they've done, where they've made money, where they've lost, right?
Absolutely. In fact, I could recall my CA days, still I used to fill up IPO forms. This is 1993 I'm talking about. From that, I have seen multiple trends in the stock market. And if you allow me to recall, it
Please,
was
of course.
first 1997 NBFC crisis which hit us. Before that, of course,
Yes.
Hazrat Mehta scam was there. And in 2002, we got this Ketan Parikh crisis. After that, again, we got global financial crisis. If I just summarize this journey, I could see earlier there used to be multiple crises hitting the market and stopping it. Of late, it has become far more smoother and stable. And that's the change I am looking in the stock market as a broad trend.
Yes. How has the brokerage industry been doing this year? In terms of, I don't know, volumes is the most obvious one because that's where your commissions come from. Retail, FI participation, everything, F&O. What's been happening? How has this year been? Because you had this nice boom that happened after COVID. 2021, 22 was slightly calm. 23 was really good. 25 seems to be kind of calm all over again. But your view on that?
Yeah, of course, you are right. Currently, Anupam, the market has been little quiet in terms of the levels at which it. But I can tell you one thing. I think India is becoming a nation of investor from being a nation of saver. And I could still see, even today, you see huge Demat account addition happening every month. If I recollect the number right, even today we are opening 25 lakh Demat accounts every year, every month. And if I just look back, just before COVID, we were around 4 crore Demat account in the industry. Today we are around 20 plus crore Demat account, and it is increasing. So my sense is the participation in the brokerage industry or investment industry by investor is not dependent on market levels. I think it is beyond that. It is beyond the levels in the market. Investors are today looking at equity as a avenue to invest. And today, if you look at it, no one wants to invest into fixed deposit at a 4-5% interest. In fact, we call it today, India has become, or equity has become new fixed deposit of India. And I can see that participation increasing. On the other hand, you would have seen a lot of talk about derivatives. In last October onwards, you would recall that CBS started taking lot of measures to check some excesses on the derivative market. What SEBI noticed, and which was very important, that 90% plus investors or traders were losing in F&O. And that's when SEBI realized that it is possible that a lot of investors are coming in this market and they are basically trying their hands at derivative without knowing them. And that's when they tried putting some measures, and some of the measures, if you recall, one of the measures was weekly expiry. Investors used to come and trade on the intraday on the last day, and it was like, trying your luck on the last day. And that is when SEBI thought there is an excessive activity happening, and that's when they checked it. And thankfully, I can tell you with the numbers, in the peak, we had around 50 lakh investors trading in F&O on a monthly basis in last year, which today, if I look at that number, has moderated to 30 lakhs plus, which means that there is a moderation. The investors who are, you can say, little more educated are being there. Some of them have actually gone out of the market. That is good thing which has happened in terms of investors' participation. But second is on the brokerage industry. What has happened is that, of course, because of these measures, the volumes in the derivative market has gone down. And rough estimates at anywhere between 30 to 40% orders volume in derivative has gone down on retail side. And what has happened because of that? The brokers who were primarily driven by the derivative is when they have seen some revenue moderation. You would have seen some of the brokerages are now pivoting towards other mode of revenues in terms of wealth management and other products like mutual fund and investments than only derivative. Thankfully, at Kotak, we always were balanced and we were offering all the investment product along with the derivative. So just tell you that derivative dependent brokerages have been little bit more impacted, and they are having to pivot to the other areas of business. We are broadly balanced, and we are continuing to focus on most of the areas of the businesses.
How have traditional brokers such as yourself, and you're pretty large, faced up to the new age or what's called discount brokers, right? Because in the last 10 years, the proliferation of these, they started, offering tech platforms and really lower rates of brokerage have kind of, in a way, challenged the traditional brokerages that were there, owned by banks, independent ones. How has that dynamic been playing out? Because now it's probably going to be 10 years old next year at some point of time.
Absolutely. I love this question, Anupam, and this is close to my heart. In fact, when discount brokers started in India and after COVID, particularly, they saw the good growth. To credit to them, they have actually expanded the market. The kind of platform they provided, they brought in a lot of youth on the platform, and they created an investing habit. So credit to them. At the same time, investor wants beyond execution. So what is happening is that now, yes, you brought the investor. Now what? Investor is wanting to look at end-to-end financial solution, and that's when you need to look at whether you are able to provide end-to-end financial solutions. Another thing, interestingly, in fact, we keep debating this, and very interesting thing. Sometimes you put digital broker, new age broker, and discount brokers in one bucket. But actually, if you look at it, those are three different things or two different things. One is you have a digitalness in your platform, and second is you have discount in your. Of course, this when they came, the discount brokerage started offering discount on the cash market, and they also had a superior platform. So they did two things: new age platforms, discount broking on the cash market, and derivative they went into flat pricing. Now traditional brokers used to charge brokerage on delivery, which would be ad valorem. You will be charged 0.25% of delivery, say, as a brokerage, and derivatives was very small for the traditional brokerages. Now, what has changed is that over a period of time, that technology can catch up, and it is nobody's monopoly. Even traditional brokers have started deploying latest and advanced digital platforms. For one, at Kotak Securities, we have launched our Kotak Neo platform, and which is one of the superior platform, giving most of the facility and features which a digital broker can give. And on discounting, Anupam, again very interesting. Sometimes when you look at discount brokerage, you think as a discount. Now, what do you mean by discount? Discount can be on one product versus all the products. Today, if I look at it, there are three broad investment segment in the any broking industry. One is your cash market, when it is a stock investing. You buy and sell a stock, what brokerage you pay. Second is you buy and sell derivative, what brokerage do you pay. And third is you do MTF.
We'll come to that. That's going to be the next question.
Second is a margin trading finance. That is where you pay some charges. Now, interestingly, if you look at it, discount brokers have started and entered this market saying, okay, they will discount the investing completely, and they made it zero. But on the derivative side, they said we will charge 20 rupees per order as a brokerage, and that became the thumb rule. And then recently, some of them have launched MTF,
Yes.
where they've started interest rate anywhere between 14 to 15%.
Yeah.
Now, the traditional brokerage traditionally had mostly stock investing to offer, and entire brokerage was charged as a percentage to that. So, of course, to that extent, they were disrupted. With the digital adoption, like at Kotak also, we have developed Kotak Neo, where we have got advanced derivative capabilities. It is an advanced derivative trading platform. And what we have done interestingly, and I am sure a lot of your listeners also would not know,
Mm-hmm.
that today Kotak offers discounted price on derivative.
Okay.
Unlike discount brokers, which charges 20 rupees per order, we end up offering 10 rupees per order, which is 50% discount. On the MTF, which is a loan product on which we charge as low as 9.69% interest versus 14 to 15%. So it's a relative term that what are you discounting? But yes, you are right. Digital brokers started with digital platform. They captured the market, expanded the market, and it is a big win for the market. But now I think time has come to expand this market and give the investor end-to-end financial journey.
Yeah. What does the commission pool look like right now? For the entire industry, not just for Kotak. I want to know this because at one point of time, some time ago, when derivative trading was at its peak, the entire derivative market was some 3 times, if not more, of cash market. And obviously, the commissions will also reflect that, right? Because the commissions from derivatives would also be larger than those from the cash market. Now, MTF has come in. MTF has been around for some time. Just help our audience understand this. What does the commission pool look like so that they get an idea that today when India logs on to a brokerage, what is the main activity?
You are absolutely right. At the peak of derivative boom, industry pool or revenue pool was more swayed towards the derivatives. Even today, my sense is that more than 50 to 60% of the revenue pool is still on the derivative side. Although it is only 20 rupees per order in the industry, but still it is far more significant because number of orders in the derivatives are far higher than the cash market. Just think about yourself as an investor, you will do one or two buy transaction, sell transaction on the stock investing. But if you are a derivative trader, you will end up putting 20 orders, 50 orders, or even 1,000 orders in a day.
Exactly.
So obviously the volume on order size is very high on the derivative, and that's where the large part of the revenue pool is even today. You'll be surprised to know some of the discount brokers' revenue pool or revenue mix would be 75 to 80% derivative,
Yes.
and balance would be only 10-20%. So the one is the industry pool, which is 50-50 today or 60-40 in favor of derivative. But if you look at some of the discount brokers would be heavily dependent on the derivative side.
I'm assuming for Kotak, it's not that.
It's not that. We
Yeah.
are far balanced.
So, how do you get your customers? Let me ask it in a different way so that our audience understands this. When someone is opening a brokerage for the very first time in his life, what are the 3 things he should look out for?
So of course, the first and primary thing today, the new age investor wants the better and superior platform.
Yeah.
So that becomes the hygiene now. That is no more a differentiator. Second is, of course, they want to look at the comfort and the trust and the advice they receive. See, today what has happened is that information overload is there. You need to cut the noise and see what makes sense and what is more valuable. And that's where, in fact, I would appreciate some of the, efforts from your kind of players who are bringing credible source of information. Because today there is a lot of deep fake going on. There are vested influencer going on. So that is when I think very important for an investor to choose a trusted platform where they think information is very trusted. And of course, then finally the entire financial solutioning. Because when you start with something, you will end up consuming one product, but you are looking at your financial journey across financial product. So it is better if you are with a platform where you can get not only equity, you can get equity, derivative, currency, commodity, mutual fund, IPO, bonds, and everything and everything.
Yeah.
So that makes sense because you can consolidate all your financial planning at one place.
Okay, cool. Now let's get back to the question that I wanted to ask prior to this, which is margin trade facility, margin trade financing, whatever you want to call it, MTF. Can you just walk our audience through, for someone who's never heard of this at all, what exactly is it? Matlab, is it like a smart EMI, no cost finance, or kya hai ye exactly?
Very, very well questioned, Anupam. And I also know that this is not very well used tool in the market, and I know a lot of investors would not know. They might have heard about it, but they would not have deciphered it. And I would just like to simplify this thing. MTF is nothing but a loan taken by investor from a broker to buy some stocks.
Yeah.
So it is a very simple term. You are taking a loan for buying a stock. Now, just give you an example. You have got say 1 lakh rupees with you,
Yeah.
and you like some stock very much, and you think there is a potential for a big return, but you want to buy more, but you don't have money,
Yeah.
or you are expecting your money to come back in a month's time. Let's say you are waiting for your salary or bonus to come in, but you want to lock in your investment now. That's when you go to broker and say, hey, I have got 1 lakh rupees. Can you give me 1 lakh rupees so that I can buy stock worth 2 lakh rupees, and I will pay interest on the 1 lakh rupees that I have borrowed. And at the end of the day, if I make whatever return, it will be 2x
Sure.
because it is a leverage capital. So MTF is a very excellent tool. And if you ask me in terms of leverage, it sits between zero leverage to 100x leverage in derivative. This is around 3-4x leverage. So in my view, this tool is not very often spoken about. Maybe the term itself is a little complicated. I mean, what do you mean by margin trading finance? In fact, the exact SEBI definition says it is margin trading facility. But a lot of people talk about margin trading funding or pay later kind of a product. But yes, it is nothing but a pay later product, just to simplify that.
Yeah, I mean, I'm looking at it in the way that you said. Let's take a theoretical example, right? I do have 1 lakh rupees, and I know that at the end of the month, my bonus is going to come in. So I put in a trade, and then thankfully, at least the brokerage that I use says that you can take a higher position with this.
Correct.
Okay. पहला तो मैं थोड़ा like take it easy, भाई. You know, I don't know what I'm getting into.
Correct.
Folks, the way this works, what Shripal said about leverage is that instead of 1,000 shares, you can now buy 2,000 shares, let's say.
Correct.
Okay, because you're taking a loan of 1 lakh and you're putting in your 1 lakh. But the profit is all yours. Let's say that the stock price actually goes up by 20%. So the profit that you make on that 100 to 120 is 20 rupees. 20 rupees multiplied by 2,000 shares is whatever, 40,000 odd. You keep the entire thing. You give a small portion of that as interest to the broker, if I've understood this correctly.
Absolutely correct. Absolutely correct. Just to come and simplify further this
Yes.
example, suppose you buy a stock at 100 rupees, correct? And if stock appreciates by 10%, you make 10% of the stock. And if you have taken 100 rupees loan further, you get 20% return. And just to simplify, assuming the interest rate on MTF is 12% per annum, which means 1% is the cost per month.
Per month.
So per month you are going to end up giving 1% cost. So that 1% cost on 100 rupees is only 1 rupees. So you make 20 rupees and you end up paying 1% interest. So another way to look at it is how do you consume this? For example, you want to buy 100 rupees stock and you think there is a potential to make 10% in that in a month's time. And at back of your mind, you just have to keep in mind 1 rupee is going to be my interest cost for a month. So as long as it is 101 rupees your final break even, you just have to assume that okay, at 10 rupees profit and 1 rupees cost, 9 rupees I'll make on the borrowed money and 10 rupees full I'll make on my own portion. So 19 rupees is what you will make.
Yeah. And remember, folks, if you go into a loss, you still have to pay interest. Which brings me to, sorry, go on.
Please, yes, yes.
So, which brings me to the question is like, in case I buy a mobile phone in a sale, I know that I'm paying no cost EMI for 24 months, 36 months, 12 months, jo bhi hai. How does that tenure work in MTF?
Very interesting and very efficient mechanism in the brokerage industry. You are right, Anupam. Once you buy or take a loan or say EMI, you are locked in. You have to basically go through that tenure broadly. You generally don't have prepayment options, unlike in home loan. But here it is so beautifully integrated with stock broking that today you buy a stock under MTF with say 12% interest per annum. And next day you think your price have come or you want to sell. You just sell it off and you just have to pay interest for 1 day. And if you think this is a very long-term holding and I want to continue holding for 3 years, no problem. You can continue to holding and keep on paying interest and you can watch your stocks going up.
So how is the interest paid in that case then? Is it debited to my account on which you have a hold, obviously?
Absolutely.
It's debited that way.
Yes.
So I need to maintain that money in my bank account.
Yes, absolutely. So the way it works, Anupam, is that whenever you have taken the loan from the broker, whatever stocks you have bought, it comes in your Demat account.
Correct.
But it keeps pledged in favor of the broker because it is a borrowed, it is bought from the borrowed fund. So that pledge is a collateral available to the broker.
Yeah.
And of course, you have to pay this monthly interest in your account. If you don't pay, obviously you will get charged interest on the interest. So it is better to discharge your interest obligation monthly.
And worst case scenario, what the broker sells it, let's say that God forbid, a situation comes where I don't have any money to pay interest, but the stock is still there. I haven't sold the stock. So then the broker can use that pledge and sell the shares in the market?
Yeah, broker has right to do
Yeah.
that. Yeah.
And what are the interest rates roughly on this?
So interestingly, as I said, this industry has evolved over a period of time. Of course, Kotak, we are one of the earliest to offer this product. Today, the in market, the interest rate ranges from say 10% to 15-20% also. Most of the market today, if you ask me, discount brokers would be around 14 to 15%. We are as low as 9.69%. But you can roughly say you will be able to get 10-12% interest rate, which is actually, if you ask me, better than your personal loan or better than your credit card. In fact, I would advise anybody never take a personal loan or a credit card borrowing and then invest into stock market. It's not right thing to do. It is very expensive thing to do. But this product at 10-12% rate, I think it's a beautiful product. If you have a conviction on the stock, you can actually double down on your investments.
Do you differ your rate of interest from customer to customer? Is that your call that you take depending on my activity, or is it like a flat rate for pretty much everybody who's on a platform?
There are multiple plans. It's a package. It
Okay,
depends on
okay.
that, what is your brokerage, what is your derivative rate, and what is your MTF, and what is your subscription fee. So, like the plan that we have, Trade Free Pro, where there is a package that it is 0.10 brokerage,
Okay.
it has got 9.69% interest, and it has got monthly subscription fee. Otherwise, if you want to go to other plan, then interest rate could be 14%,
Got it.
15%.
Okay. Does my credit score get affected? Just asking because this will show up somewhere in my credit score also, right?
Yeah, as of now, it is not linked to that, but I would assume yes, it is, because financially it is a loan.
I know that. I mean, I was wondering, when you are giving a loan to me, you would have some data of mine with you, my PAN card, my trading patterns, my income, because now also you have to declare that to the broker. So does that go as some, because if I'm taking a loan from, say, for a credit card or a personal loan, I have to give my income documents, I have to give my credit score automatically gets called up. I'm just saying that how does it work in margin trading? Do the same numbers are at
Mostly,
play?
yes, there is a profile check which is done. But interestingly, you would be surprised to know it is unlike the loan business of the bank or the NBFCs. You see hardly any debt here. Because what happens is that you have got a collateral which is completely liquid.
Yeah.
Technically, tomorrow, suppose you don't pay and the stocks falls down, something you would have heard the term called liquidation.
Yes.
Margin calls.
Yeah.
So basically, broker does a margin call and sell off your stocks. And generally, the way entire structuring is that your leverage is dependent on what kind of stock you are buying. So if it's a very liquid stock, assuming you are buying, you will get 4x leverage. And it means that you are paying 25% margin.
Yeah.
As long as stock is not fallen by 25%, broker is covered. But suppose stock cover goes down by 20%, broker will call you that please pay 20%.
Sure.
Or I'll sell it off.
Yeah.
In case, and nowadays systems have become so automated, in a fraction of time that gets liquidated. So technically there is hardly any debit which is left. But yes, having said that, if there is a debit and if you don't pay, your credit score does get impacted.
And margin trading facility, now that you mentioned it, is available for all the listed stocks, or only for some few stocks where the broker has some level of comfort?
It is a well-defined product by SEBI.
Okay.
Currently, it is allowed around 14 to 1500 stocks. It is not allowed for all the stocks.
All the stocks,
So if it is an illiquid stock or a micro cap stock, it might not be allowed.
Sure.
On top of that, broker also has got a flexibility to offer into which stocks they are comfortable. For example, we don't offer into all the stocks. We would offer around 1200 plus stock, not on all stocks.
How is this product? I mean, what's been the response to this product, say, over the last 4 or 5 years? I know for a fact that this has been around for quite some time. It also has to do with the fact that in India, you can't keep a block of money with your broker, right? Abroad, there are, packages, or there are brokerages which say that, okay, you can keep 10 lakhs with me and I'll give you some small rate of interest on that. That's not allowed in India as far as I know. So this is a good way of giving the same thing at interest to the customers. What's been the response so far? I mean, this has been around for quite some time.
Absolutely right. In fact, this has been around since, I can say, more than 8-10 years now.
Yeah.
And initially, the offtake was not as much. But if I look at last 2 to 3 years, it has grown. Say, last couple of years, it has moved from 50,000 crore market-wide loan book to currently it is 1 lakh crore, close to 1 lakh crore.
Okay.
So it is adopted more and more by the investor. As the awareness increases about this product, it is about advanced investing.
Yeah.
So people also graduate from simple investing to advanced investing, and that's when this kind of additional or advanced product comes into play. Another interesting thing to note is that this book which is going is being disclosed by exchanges every day. So you
Huh.
actually come to know what is the total size of the book in the very transparent
Yeah,
mechanism,
yeah,
where
yeah.
you know today as an industry we are only 1 lakh crore book in India. You would actually ask the next question, I'm sure, and I can answer you in advance,
Hmm.
is that you would say, oh, 1 lakh crore is a very large sum, and isn't it too high? And I often get this question. This I used to get the question when it was 50,000 crore, and I could say that it is nothing compared to the developed market.
Yeah.
And today, if I say 1 lakh crore, roughly 11 to 12 billion dollar, this is Indian book, margin trading book. If I compare that with in China, which is around 350 billion.
Yeah.
If I go to US, it is 800 to 900 billion dollar.
Yeah.
Even if I compare that with the size of economy, it is still we are far lesser than the developed market.
Yeah, I mean, I just look at it in terms of average traded daily volumes at the exchanges. It's hardly anything there. Also, I look at it as a number of the total market cap. We are at what, 4-5 trillion
Correct.
market cap, and this is like hardly, not even. So so I'm sure there's room to grow, folks. But as always, a note of caution: this is a leverage trade, so please understand the product. Talk to your broker. If you are with Kotak, talk to them and understand how margin trade facility works, so that you don't have any negative surprises. Remember, it's a loan. Loan always comes at interest, and you have to pay that. So be careful with that. Okay, Shipal, what's been happening in retail investing? Right? You guys are pretty large. We know that we had this very big boom post COVID. Has that sustained? Is it slowing down? You gave me Demat numbers, which is fine. But what about investing in directly into equities? We have this massive SIP number coming in, 28,000 crores or whatever the number is. What's been happening in cash, in retail trading in cash equities? How has that trended in the last few years? And what's your outlook going forward?
Yeah, Anupam, a great question. I think it makes sense to understand how retail investing is progressing in India. Yes, it all started with mutual fund, SIP, but as COVID struck, and you would know, everyone wanted to experiment. So they started with SIP, lump sum mutual fund, and then they went into direct equity. If you ask me today, I would see most of the investors that we have on the platform who are having mutual fund, they would also do stock investing. That was not the case few years back. You would might be only a mutual fund investor and not well into equities. Today, I see both the products are completely integrated. As an investor, you want to give your money to fund manager in mutual fund, where portfolio is managed by them. It
Yeah.
is far more diversified. At the same time, since there are a lot of educational tools available, you also have view on the market, and you also want to say, and access is very easy today. It's not, you can say, time taking to open a broking account. You can take 5 minutes to take one
Yeah.
broker's account. You can have 5 brokers account also. So I think I have seen stock broking is integrated into savings or investing as an integral proposition.
See, because if you ask someone the difference between investing in a mutual fund and investing in stocks, obviously investing in stocks is riskier. So it requires a very different set of risk return profiles, understanding the markets, having research also, and then people don't have time for all that. They want to make money quick. Okay. They tried in derivatives, Mark kuch hua nahi, to then they try out here in
Correct.
equities. I was just trying to get an idea that you said that now India has got 20 crore Demat accounts, okay,
Correct.
which at one point of time was not even half that number or one-fourth that number.
Correct.
But of that, the active base must be much lower. People who actually buy or sell, say, once in a week or twice in a week, or who actually want to build a portfolio of stocks. How is that been doing? Are people, for example, taking right decisions? How is that shaping out?
So two aspects, Anupam, you ask. One is that out of 20 crore, how much is unique and how much is active?
Yeah.
So out of 20 crore, my guess is around 10 to 11 crore is a unique investors.
Okay.
These are total number of Demat account, but unique investor is only 10 to 11 crore. And within that, there is a NSE published data which says that around 4 to 5 crore is a yearly active.
Okay.
So in a way, it is only 4 to 5 crore which are the investors who have traded one trade in a year.
Wow.
So it is very small in a way. And if you actually compare this with the mutual fund active folio, it actually coincides with that number.
Oh, is that right?
Yeah. Am I correct?
4-5 crores active mutual fund folios and 4-5 crore Demat accounts active.
Active. Yeah.
Wow.
So that's the reason I was saying that now mutual fund investing and equity investing is becoming increasingly popular and you can say integrated. I'm sure you would also know that today you can buy a mutual fund which goes straight into your Demat account.
Yeah.
So obviously it has become one Demat account where you hold stock, ETF, and mutual fund together.
How do you see this evolving long term now? Total Demat accounts are at about 20 crores. I'm assuming that India has about 25, 28 crore households. So it's like saying that we're at that point where if you don't assume duplication, each household has at least one Demat account, which probably is not the case because it's still more of an urban and tier one city phenomenon. What is the outlook in terms of new Demat account additions going forward? Will there be some, with the market kind of cooling down now? Do you think there'll be a cooling down there as well, or is this here to stay?
I think I can just say that it has just started. The growth has just started. I mean, one way to look at household, but one way to look at is 1.4 billion population. 140 करोड़ में से आज 5 करोड़ ही ट्रेड कर रहे हैं ईयरली. So that penetration is hardly anything, and unlike developed market where it is 50% plus penetration of equity investing, we are less than 10% by whatever measure we take it. So I think it is long way to go, and we can see even if market is falling or market is quiet, investment or investing is growing. New accounts are still opening. So I think it is here to stay. Still, many accounts are coming from tier 2, tier 1 cities. Tier 3 has just started. There's a remote part of the India is to be getting the taste of this.
I'm sure if I get Kotak Mutual Fund also, they'll probably agree with what you say because they're also beneficiaries of this.
Absolutely. Yeah,
And I'm
yes.
sure that, equity investing will only benefit going forward. Folks, we're going to take a small break out here. On the other side, we're going to come back and talk about favorite question, kya lagta hai, outlook, and much more. Don't go anywhere. We'll be right back.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
And welcome back. Shripal, favorite question. Everybody, same thing. Actually, let's talk about first the macro economy. What is Kotak's view on that? And then we'll come to the stock market.
I would say my personal view first, Anupam. Economy is doing great, and I am looking at little macro in terms of, outside in view of India. India has just become fourth largest economy in the world. Recently overtaken Japan. In a year's time or so, we'll overtake Germany also. We'll become third largest in the world. We are still fastest growing economy in the developed or developing nations. So that being said, even other macro parameters are improving. If you look at fiscal deficit, if you look at inflation, if you look at other macro parameters, I think economy is doing great. In terms of recent developments, some of the challenges or headwinds that we are facing, of course, the favorite being the Trump trade tariff and some of the geopolitical tensions.
Yeah.
But I could see lot of active intervention, if I may say so, from RBI and government to ensure that we face these headwinds and come pass through this. And some of the measures that you can actually recall are starting from budget where 1 lakh crore plus of income tax cut put on the investment. Then RBI came out and did the rate cut. EMIs are becoming cheaper. Loan rates have coming down. And after that, RBI also infused liquidity.
Yep.
RBI also decreased the CRR, where again liquidity has come in the market. And with this GST rate cut, further there is more consumer push happening. So in my view, all these measures are actually taken to ensure that the headwinds are taken care of, we stay protected, and our growth momentum continues.
Okay. Kotak Research calls on sector stocks overweight, underweight. If you can just discuss that for our audience.
Yeah, sure. So, one, as a large market, there are two things which is happening. If you look at India, is still, you can say, little expensive vis-a-vis other emerging market. Even today, our market trades at around 21 forward PE of next year. Versus if you look at, say, China, they might be trading at 15x forward PE. So in a way, it looks little expensive. And of course, to justify this valuation, you need to ensure that our earnings are far higher and growth is far higher. And that's where little challenge is there. And that is where I think the stock and sector selection become little difficult.
Yep.
But one thing at Kotak we say is that we need to be little patient for next 1 or 2 quarter in terms of our return expectation. Not to say we should move out of the market, stay invested, be stock specific, and some of the sectors which are still looking reasonably attractive
Yeah.
are one of the financial side, where particularly with the RBI rate reduction and the consumer push, it looks like the large cap banking stocks, NBFCs, housing finance companies are going to get beneficiaries. They will have some moderation in NIM for next 1 or 2 quarters. But once rates are fully transmitted and implemented, I think they will be beneficiary of the overall growth momentum in the economy. And second sector, which is looking little more interesting, is at the top end of consumption, particularly the hospitality, hospitals, and even digital platform companies. They are looking great. So these are some of the sectors which are looking interesting. As of now, looks little difficult to take a call on the IT because growth in the IT has moderated. At the same time, there are challenges and speculation around what will happen to the tariffs on the IT services. So on that, I think it looks like that it is time that we just pause here and look at other sectors.
Okay. Shripal, there was a time when whatever negative news would come in the market would go up. Okay, COVID aa gaya, market gir gaya, market फिर started to go up. Russia, Ukraine आया, market side just went on and on. Throw all kinds of bad news at the market would still go up. But last, I would say 1 odd year, you had an income tax rate cut in last year's budget. You had this massive GST reform that's come in, and you've had the RBI loosening rates, loosening their stance, and yet Nifty Sensex has gotten nowhere. So at one point when the market would go up despite bad news, to now the market staying flat despite good news, right? What's your take on all this? And going forward, any Nifty targets or anything at all?
Yeah, Anupam. So market actually factors everything in advance. So market has got an expectation of certain things. They factor. It is like buy on rumor, sell on news. That kind of phenomena. But on the serious note, what has happened is that in last 5 years post COVID, if I look at the way retail investing has happened, is that it was continuous buying and it was somewhat frenzy driven buying. It was not necessarily fundamental driven buying. So I always say that don't follow frenzy, follow fundamentals. I can also correlate one phrase in the cricketing world that form is temporary, class is permanent.
Right.
Frenzy is temporary, fundamental is permanent. So I think last October when FI started selling in the market and when Nifty started coming down is when that reality check hit some of the investors where they realized that it is not one-way street. What can go up also can come down and come down heavily, and particularly the frenzy stocks came down. And that's when now I think fundamental started playing more and more role. Coming back to your question that why the measures are still not giving impact. My view, it takes time to unfold. We have got good monsoon now. We have got festival season coming in. We have yet to get full dispersion of the RBI rate cut to the industry. I think all these measures, in my view, will start giving result in next after 1 or 2 quarters, and that is when we say that 1-2 quarter we have to stay patient, and after that we can expect good growth.
Yeah. Do you have any of those, people like to give Nifty and Sensex targets. More trading to ho nahi raha hai abhi, but there is still some time to go for that. But you have any targets as such in mind?
No, I would stay away from doing that. But as I said, you can't predict what Trump is going to do tomorrow. How can you give a target for 3 months?
But for our audience, for them, what is a reasonable rate of return on equity for the long term? See, you just said that equities are the new FD. FDs to carry a guaranteed rate of return, and by the grace of God, till date at least, there have not been too many disasters of FD going down. FD में जो बोलते हैं वो मिल जाता है वापस.
Correct.
Stock market नहीं है वैसा.
Correct.
Right? But if someone is making a financial plan out there watching this show and is looking forward to at least putting some number in his head saying that, boss, I'm here for the really long term. And I know that in the past, the Nifty has given whatever, 12, 13, 14, 15%. I don't know what the number is. Probably closer to nominal GDP growth is what they say. What would you tell our audience that what can they expect going forward if they stay invested in equities?
Yeah, so you rightly said that, what is the growth in the economy? Can you look at little more than that? And of course, the answer is yes. Theoretically, if nominal GDP is growing by 10.2%, this is what government assumed when they framed the budget. So if nominal GDP is growing by 10.2%, generally the good corporates will start giving you growth, which is 2 to 3% more than that, which is 12 to 15%.
Okay.
So, and if you are staying in the right corporate or right sectors, it is easy to get 12 to 15% annualized return. Of course, the most important part is where are your journey starting from? Are you starting from a level where it is already elevated and those growth is factored in? Then there is a challenge. You might have to wait little longer. But net, I think nominal GDP plus return is what you should expect in a longer duration.
लोग बोलेंगे यार इसमें मजा नहीं आया, 5 साल में तो हमारा 25-30% बनता था स्टॉक मार्केट में एक जमाने में. यू थिंक दैट इन्वेस्टर्स हैव बीन स्पॉइल्ड टू सम एक्सटेंट बाय सीइंग दिस, इन मिड कैप, स्मॉल कैप, हियर देयर एवरीवेयर पीपल आर जस्ट मेकिंग गुड हेल्दी 20%, 18-20%. एंड दे सीम टू बी वेरी लकी ऑफ कोर्स. मेरे पोर्टफोलियो में तो कभी ऐसा हुआ नहीं. यू थिंक टू सम एक्सटेंट समवेयर in people's minds this number is slightly on the higher side? Like for example, when you go for a social gathering, or when you meet friends, family, people come up to you and ask you, do you think that's the case? Because see, it's like saying that the RBI has something called an embedded expectation of inflation, right? They use this number.
Correct.
Inflation का एक headline number है, वो ठीक है, लेकिन लोगों के दिमाग में एक expectation बैठ गया. मतलब they already have a number in their mind. I don't know, somewhere, at least doing this show now for quite some time, and when I go out and talk to people, the bull market of the last 5 years has somewhere put in expectations that यार अभी तो market में 15% तो बन ही सकता है, एक साल में तो बना नहीं. Last 1 year the market has gone, it's been there at whatever level it has. You think somewhere there needs to be a correction in expectations? Market में हो नहीं हो वो ठीक है, expectation में थोड़ा correction अच्छा होगा.
I think there are two interesting questions in one question. Generally, the person who is going to ask you question that what is a long-term return rate, if you are going to ask a question of 5 to 10 years, I am sure that person would accept this answer of 12 to 15%. But today, interestingly, what you notice is that what one wants is next एक महीने में क्या हो जाएगा? Will I get 25% return? And you are right, absolutely. That is how a lot of mid-cap used to be driven. So those short-term expectations are completely different, and it has nothing to do with the fundamental. It has more to do with the momentum. So those will be there, but I can tell you one thing, from whatever we have seen, yes, you might have some stock which gives you kicker like 25% in a month, but on a total basis, if you look at anybody's journey for last 5 years, generally returns becomes moderated because in some lose, some you win. And that's where stock specific you might have expectation. Another interesting thing which I've noticed is that today's generation has got little shorter duration and higher expectation. In fact, as you rightly said, a lot of people started putting hands in F&O. Forget about F&O. Some people ventured into cryptos also. So I think the risk-taking capability and return expectations are becoming more and more. I am seeing that as a trend, and that might also to do with the little demographic of India. Younger people are generally more risk-taking, and that expectation is there. But I think as they mature, they will realize that 25% year-on-year return is not sustainable. You might get lucky sometime, but it can't be achieved over a period of time on the large amount of portfolio.
Don't make your financial plan with 25% return on equities, folks. Please just, be a little bit more sorted. Listen to what Shripal is saying. The one thing that I really like when I have someone on that chair who has worked for more than 30 years in the markets, I really like it because they come with the benefit of experience, which a lot of our listeners, a lot of our audience would not have. I want you to use that experience and tell me just 2 or 3 core beliefs that you have had working in the market for so long, that can benefit our audience. That keep these 2-3 things in mind when you're investing. Baki market dekh lega. 2-3. You call it principles, you call it checklist, you call it beliefs, you call it whatever you want. For our audience who's obviously not seen as many market cycles as you have, what would your experience tell you now?
I think first and foremost, don't buy based on tips, and that is a very hygiene thing. After you get the tip or you get interested into stock, do some research. And today I think research is very easy. So that is the second thing that you must do. That whatever stocks you want to invest, something about it, and so that is the second thing. And third, look at some trusted source to get information. One, of course, internet is so vast, you can get 20 kind of information, but do some credible source check, and after that you invest. And last but not least, just don't forget your portfolio and don't exit too early. If you believe in the fundamentals, What I've seen interestingly is that a lot of investors, retail investors particularly, they end up selling the stock when they get some profit. But then when stock goes down, they fall in love with it. And that's when I think it is the biggest mistake, because then you end up holding large amount of losses on your book. You end up booking very small amount of profit.
Wow.
So only three things: don't buy from tips, do some research, and if you believe in fundamental, just don't sell too early.
Folks, you know why that's important? Because you'll keep on hearing about someone who says that I invested in the IPO of XYZ company in whatever 1990, 1995, whatever it is, and now I'm sitting on 10, 100, 200, I don't know what. For every one person who says that, I can guarantee you there are 9 people who will tell you that they bought a stock, it doubled, and then they sold, and they regret. They regret, because the stock after doubling then went up 10 times. And India is full of that. It's a bottom up market, so the chances of someone falling into greed, not waiting, which is why Shripal's advice is on point out there. Do your research, don't go on tips, search for credible sources of information and sell, based on some logic. ऐसा नहीं कि तुम्हारा प्रॉफिट बन गया और बस चलो, right? Because if I'm sure, I know that I believe in India's long-term growth story, and I believe in India's equity market. My portfolio is stocks. So I'm sure that that I'm sure that you would probably have the same views on that.
Absolutely.
With that view, you need to be invested for the longer term rather than just make your money and then go. It's you find a lot of people like that, right? I mean,
No, there is nothing wrong in making money and go. Something which is wrong is that make money in some stock, make some small money in some stock, and do large losses in other stocks is what I think is a mistake. If you make money on the full portfolio, it is still fine. Okay, fine. I made money. I parked for some time for the better opportunity. It is fine. But what I've seen often is that you have 5 stocks. In 2 stocks, you are making money. You book profit. 3 stocks, you are having losses. You are saying, no, someday it will come. Now, somewhere you have to recognize that you might be wrong. Market is telling you the right story. 2 stocks you were right, and 3 stocks you are wrong. Just exit that. And that's a simple thing that one can do. Very difficult to execute, because sometimes it is counterintuitive.
Crazy, folks. Just think about it. Cut your losses, back your winners. It's as simple as that. I know it's not simple when it comes to execution, but that is a fact. I have been through that so many times in the past. When I look at my portfolio, you just feel that वो एक ना एक दिन आएगा, अपना टाइम आएगा, kind of a thing. With those losers, वो कभी आया ही नहीं.
Correct.
और जो winners था उसको बेच के, Shripal, this recent GST 2.0, the reforms. First, how do you think that will impact India at a consumption level and then the stock markets?
Yeah, so this is a great landmark reforms from government, and see, most of the consumable items are now lower the tax. Now it means that you can buy with the same money more amount of the stock, and that means that you will have more demand. As a consumer, you will be able to afford and buy or upgrade your purchases, and that also means for the corporate it will be more demand, which will drive their capacity expansion. So I see this as a two-way approach where consumption will increase, consumer will be benefited by buying more consumption, and on the other hand, corporates will be able to have growth in terms of their top line. So it is a win-win for both the side, and I'm sure that if both this works well, of course, for that to happen, corporate have to ensure that they pass on this benefit to consumer, which I'm sure that ministry and the corporates are on the same side in terms of committing that yes, this benefit will be transferred to the consumer. Once that happens, you will have a virtuous cycle of consumption and revenue what will go up.
Impact on stock markets.
Stock market is definitely going to be looking forward to this kind of a kickstart, because finally Indian economy will grow based on the private capacity expansion and based on the consumption. Apart from the GST cut, the income tax rate cut, both will, I think, spur the economy to the next level.
Okay. If you had to give one piece of advice to a 25-year-old putting 10,000 rupees into the market today, what would that be?
The first advice, Anupam, would be that don't buy on tip. Just do little research on whatever stock that you want to buy, and it's very easy today. There is a plenty of information which is available. Also try to look out the credible source of information. There's a second thing. As a 25-year-old, I'm assuming you would definitely go to one of the GPT's platforms. There is nothing wrong in it. Take advice and take information from there, but take your own judgment. And third, when you buy the stock, believe in that stock and just don't exit too early. Stay invested for the long term.
Okay. Kotak Securities sees trading data from millions of investors, right? What's the biggest shift you've noticed in the way Gen Z invests in the markets?
Two trends, Anupam. Gen Z today, first, they are mobile first. They want to do everything on their own. So, first change is that everyone wants to do it DIY. Second biggest change is that they are little experimental and little more aggressive in terms of what they want to get into. They are little adventurous. So they want to try out and learn multiple products. So what we have seen is that today a young investor comes in the market, he doesn't stay only invested into SIP. He ventures into not only SIP, mutual fund, equities, even derivatives. So one, that is a big shift that the youth is wanting to experiment all the products, understand all the products. And second, I think their risk reward capabilities or risk capacity is little higher. They are okay to lose money for higher risk. These are the two trends which is happening. But at the same time, we have seen, over a period of time, they learn the full balance that how do they structure their exposure to all these products. So I think the balance comes out eventually, but initially they experiment on all the products.
And now that we are done with the bulk of our questions, our last and final, our standard question to all our guests who come here. Shripal, what book are you reading, and can you share some good reading recommendations for our audience?
Let me start with the first thing. Stock market is the biggest book that you can read.
Okay.
But on the serious note, yes, recently I got hold of a book called Atomic Habit.
Yeah.
From James Clear. Very interestingly, what I noticed was that it says if you make yourself better by 1% every day, you get the compounding benefit in a 1 year time. That is on 365 days. If you have improved 1% every day, you become 37 times better. Now, that is so interesting. Basically, it says tiny habit consistently done gives you remarkable result. And why I love this is it is so true even on the equity markets. It's lesson of compounding. If you do SIP or if you do continuous investment consistently and if it grows, it gives you compounded return. So I think I resonate this and I love this book.
There you go, folks. Atomic Habits by James Clear, favorite for many of our guests who come out here. On that note, that is a wrap on this episode of Paisa Vaisa. My guest, Shripal Shah, MD and CEO of Kotak Securities. Shripal, thank you so much for doing this for our audience.
Pleasure is all mine.
Thank you so much, Shripal.